FinTech is taking the world by storm, and it is all-inclusive. It doesn't care what income, what religion, or what gender you have. There are new solutions for all types of consumers and all types of businesses. Hi, I'm Julia from Shortlisted Productions. This is our second episode in our new business series about FinTech. In the first episode, we looked how FinTech companies are disrupting traditional players. In this episode, we're going to examine the driving forces behind it.
Impact of the financial crisis.
Banks and financial institutions have always been about complex rules, procedures, regulations, and bureaucracy. After the global financial crisis of 2007 and 2008, after the collapse of Lehman Brothers and the subsequent bailout of major financial institutions by the government, consumers lost their trust in the industry. Various surveys suggest that consumers are not happy with the return on their savings. They're worried about security of their personal data and potential fraud. They believe that banks overcharge them for their services or sometimes just don't provide the services they require. All of that creates the environment where consumers are more open to experimenting with new service providers. In addition, traditional players have been forced by regulators to be a lot more careful with taking on risk, dramatically reducing lending to riskier borrowers. That means that a lot of small and medium-sized enterprises, as well as first-time buyers, have been cut out of the system, and this category of borrowers are looking for alternative channels.
The rise of millennials.
As the millennial population becomes the dominating customer segment, demand for ease of use, convenience, and easy access anywhere, anytime is increasing. The rise of the smartphone has massively changed the behavior of consumers. They now want access to services, advice, and information instantly and 24/7 across different devices, channels, and multiple touch points. Whether it's checking their online account or setting up online investment portfolio, people now expect to handle their financial affairs as easily and conveniently as they handle their Facebook page or their emails. Only consistent innovation, often led by technology startups, can help meet these demands.
Connectivity and availability of big data.
A more connected society and the ability to acquire and analyze big quantities of data has fueled technological innovation. This innovation allows to deliver customer insights and a more customer-tailored experience. So in developed countries, FinTech innovation is hugely driven by changes in demographics and public needs and demands for a more diversified financial system. They want to have the same digital tools which give them the same experience and convenience which they already got in other sectors, such as online shopping and travel.
Inefficiencies of existing infrastructure. Unbanked population.
If we look at developing countries, FinTech has been driven by the unique and local challenges in the environment, and often by the inefficiencies in the existing financial system. It has been estimated by the World Bank that there are 2.5 billion uninsured and unbanked individuals in the world, mostly residing in Africa, Asia, Latin America, and the Middle East. There are also millions of small businesses that operate without a bank.
The term unbanked refers to people who do not have access to banking facilities or services. This could be for various reasons, including cost, distance, and the bureaucracy of traditional banks.
In most emerging market economies, cash was always king, as local banks were reluctant to develop their branch infrastructures in remote rural areas. So it was mobile technology companies who spotted the gap and the opportunity. In 2007, Safaricom, a Vodafone subsidiary and the largest mobile operator in Kenya, introduced their first mobile money solution called MPesa. Safaricom users were able to adopt the service fairly quickly due to the widespread use of prepaid mobile services and also by the fact that MPesa was already installed on their SIM cards. Mobile phones were able to bring banking services to areas without banks, to people who couldn't afford a bank account. And now these people use their mobiles to securely store their cash, to buy goods, to pay their bills, to send and receive payments, and even to borrow money. And that was only the beginning. now we can see platforms where foreign investors gain access to these newly created markets. They can lend money to small businesses that require fixed assets, working capital, or any other investment for growth. Often these loans are securitized in the shape of graded investment notes. All of that means that we're witnessing the creation of new capital markets on mobile phones. The FinTech in developing countries is not just about making services more convenient and more secure. It is also creating new infrastructure and including millions of people in the real economy. Further penetration of smartphones is expected to boost the pace of new product development and further increase the availability of financial services to the masses. Feature-rich interfaces and greater functionality of smartphones offer a more intuitive customer experience, making the adoption of mobile financial services easier.
We have reached the point where a critical mass of consumers and business customers across the globe are embracing new technology-driven solutions as a viable alternative to services offered by traditional bricks-and-mortar financial institutions.
Tech companies are realizing their immense potential as they evolve from being just enablers. Now, when they command a high level of consumer trust, they have become active industry participants, competitors and disruptors. But does this all mean the beginning of the end for the traditional institutions? Stay tuned in for our next episode, where we will look at the response of the incumbent players.
Shortlisted Productions specialise in the production of business video content for corporate clients. Please contact us for a free quote at shortlistedproductions.com. If you want to feature your company in our FinTech series, please contact Julia.